Let's have a discussion now on credits, particularly from banks, the ability to be able to lend more to Nigeria's economy. Central Bank of Nigeria, just looking at some recent data in terms of credits to Nigeria's private sector, coming in at 76.2 trillion naira in March. Marginal 0.03% increase from the 76.25 trillion in February, but down from 77.3 trillion in January. Now, of course, Central Bank of Nigeria has been hawkish in order to manage inflation expectations. That's made the cost of credit higher. And there's also the role that the banks play in that as well. We're very happy to have in our Abuja studio Professor Graham Penn. He's a professor at the University College of London. Decades of experience in the legal profession and also in finance as well. And Professor, good morning to you. Thank you so much for joining us. I guess jumping into this matter of credits, have to talk about foreign exchange and the rates of Nigeria with respect to the reforms that have taken place. I know you've been speaking with a number of folks since you've been in Nigeria. What do you make of the reforms that have been implemented in terms of foreign exchange and I guess how the naira has been trading against the US dollar?
Yes, well, first of all, it's a pleasure to be here. Thank you for inviting me. The issue that I've been traveling to Nigeria for the best part of 20 years. This is a current trip, but I've been working with stakeholders on looking at ways in which we can expand the availability of credit in the economy. And the expansion of credit in the economy is not just about looking at the domestic economy, it's looking at international investors as well. And as you can appreciate, international investors would have been extremely concerned if there were issues in relation to the exchange rate that would apply to the investments that they were making in their investments in Nigeria that differed. And so I think looking to deal with that is going to give confidence to investors that there isn't a twin track that they will be looking to actually have to deal with. I think the issue is a broader one, however, which I'm sure you're going to go on and ask me about, which is how we can expand the availability of credit in the economy and the restrictions that banks are currently subject to and how those restrictions might be capable of being relaxed.
Well, yeah, okay. So let's get into that because that's, I think you're talking about it's a regulatory issue in terms of the cash reserve ratio that, holds amount of, capital for banks that interest can't be earned on them, they can't be lent. So do go ahead, because you did give a lecture to the Chartered Institute of Bankers of Nigeria, I think the last time you were here, where you challenged them to look at the credit structure in Nigeria, particularly from the bank side. So can you delve into that some more?
I'd be very happy to do that. And I think the issue that is facing Nigeria is not unique to Nigeria. It's a problem that's been facing banks throughout the world. And it goes back to the global finance crisis of 2007, 2008, where banks basically, as you know, got ahead of themselves. And most people looking at the problem would say that banks were the cause of that crisis, almost brought the world to an end financially. Since that crisis, banks have been very, very heavily regulated in terms of their ability to do business. And the regulation has been imposed at two levels. One, in relation to the business the banks can do, and secondly, the amount of capital that banks need to be able to hold to be able to make loans available to their customers. And this is a real problem that has been facing banks in Nigeria because the amount of capital that they've been holding has been eroded because of losses that have been sustained as a consequence of lending that has frankly gone bad. And at the same time, the actual ability to make those new loans available has been constrained because it's been more expensive because of regulation for them to do that. Now, these regulations have increased in severity, frankly, until today. And it's in the past 3 or 4 months that it now looks as if those might be starting to be relaxed a little. But I think as far as Nigeria is concerned, what has happened in other jurisdictions is that in order for banks to be able to maximize their availability to make credit available, they've been looking to access sources of funding from other places. And so there's been this increasing correlation between the banking sector and other parts of the financial sector, the pension sector, the insurance sector, and others. And when banks have been making loans available, they've been making those loans available in a way that they could then convert the loans into a form of an instrument that was capable of then being being transferred into the pension sector, the insurance sector, and other parts of the financial economy. And I'm not just talking about within Nigeria, but outside. And the problem that we've had in Nigeria, we haven't really had that framework. The banks have been operating in a way that is different from elsewhere. They've not been given the opportunity to transfer those assets into other parts of the sector. So it's been very difficult for the pensions industry, the insurance industry, to provide finance that ultimately can increase the capacity of the banks to lend. And the initiative that I've been involved in together with other stakeholders has been to try to unlock that. And I'm glad to say we are making some progress. There's still some way to go, but we are making progress in enabling banks to be able to unlock that credit that is available elsewhere, both within the economy and outside of Nigeria.
Is securitization part of what you're looking at? Because this takes me back to what started the financial crisis, which was mortgage-backed securities that were essentially for folks who are not really up to credit standard, getting loans that were then repackaged and then given out as assets to others, and then there was a domino effect. So can you speak to what kind of progress is being made? And I guess because I think there's a securitization element to what you're looking at, yes?
There is, but securitization is just one part of it. I don't want... Securitization is seen as the devil of the financial crisis, and I can understand that, but we need to put this in perspective. The part of securitization that triggered the financial crisis was not simple securitization, which continues to be done all over the world, in Europe, in North America, and elsewhere. This is where assets are originated, mortgages, loans, student loans, whatever, are originated and transferred. What happened in the run-up to the crisis is that financial instruments were being created that made them look like assets, and these instruments were often backed by insurance policies, what were called credit default swaps, and it was those types of transactions that triggered the crisis. The world has decided it's not going to allow those transactions to take place anymore, understandably, because they were high risk. The transactions that were simple, that involved underlying assets, did not go bad. People did not lose money on those transactions. And those are the transactions that are now engaged in the market. So part of what we're looking to do is to facilitate a structure here in Nigeria that will enable banks to make more mortgages available, more student loans available, more loans available just to regular companies, small and medium enterprises, and then package those real loans up and refinance them in another part of the economy. So is securitization part of the initiative that we're looking at? Yes, but it's only one part of it. And just to be clear, the securitization transactions that we're looking at are securitization transactions that involve real assets where the risk is contained, and people in the past historically have not been losing money on these transactions. We're not looking to go back into a world of what is called a synthetic securitization transaction. That is history. We're not going back there.
This is a great topic. So you've mentioned loans to the education sector and others. So the government, though, already has a fund, I think it's the NEL fund, which is supposed to be extending credit to students. Now, there has been a worry as to whether or not the students who get access to this fund will get jobs in the future and be able to pay back those loans. The government is giving them some time to do that. There's also a Nigerian Consumer Credit Corporation. With what you are, which has been put forward by the administration to try to extend credits to the nation. So with what you're trying to put forward in terms of securitizing these types of things, can they key into these initiatives on the administration, or do you want this to be completely separate? And I have a follow-up question. Let me let you answer that first.
Okay, your first question is an interesting one. These types of loans are securitized in other jurisdictions. I'll come on to Nigeria in a moment. But the key thing is that the securitization, in order for it to be robust, in order for it to attract investors and generate the cost of funding, which obviously one wants to be as low as possible, needs to be structured in a way that we're covering the credit risk. And so there needs to be a realistic prospect that the students that are going to be educated and are going to be then given jobs will be able to repay these loans. We call that in the market eligibility criteria. So the eligibility criteria of the loans that are made available to students will need to be high. There will need to be institutions that have a really good track record of employability in relation to the qualifications, the degrees that they're making available. And if they don't have that, that will be one of the ingredients which will prevent them from being able to access these sources of funding. I don't want to get into too many levels of complexity here, but the point I'm trying to make is that the credit risk of that student not ultimately being able to repay the loan has to be controlled. It's not a free-for-all. You can't simply say, okay, we'll make these loans available to anyone, whatever their prospects are of getting a job at some point in the future. Now, is some risk taken? Is it likely that some of those people will end up not being able to get jobs that will repay fully? Yes. And there are ways in which that particular risk can be controlled within the structure. But the starting point is making sure that the loans that you make available, there is a realistic possibility, a realistic chance that they're going to get repaid.
Now, you mentioned pensions. The thing is, and maybe you're making the wider point that there's too much regulation in Nigeria, but I guess that's just to mitigate risk. The pension industry has PENCOM, its own regulator, which regulates exactly how much of particular assets that pension funds can be directed to. So I think majority of it is in fixed income and then less in equities. They're not allowed to do anything overseas in terms of foreign assets. So how do you think what you're trying to put forward, how do you think that can jive with the existing regulations that are in here? And then there's also the Securities and Exchange Commission as well, the SEC, that would be involved in this. So how do you think this can work with the different regulators across the country?
Yes, in fact, interestingly, I met with representatives of the SEC and PENCOM literally immediately before I came to this interview, so it's interesting that you identify them. And you're right, PENCOM does have, I would go back almost to eligibility. PENCOM has restrictions on what it is capable of investing in. And it's similar with the SEC. The SEC have rules about what it can list, what you can list on the relevant exchange here in Nigeria. The good news is that we've been working with the SEC for the best part of 5 or 6 years, actually, and they do have rules that enable the sort of securities I'm talking about here, which are called asset-backed securities. These are debt instruments that are issued in the market that are backed by assets, that are backed by student loans, that are backed by mortgages, that could even be backed by infrastructure financing, that are capable of being made available and listed on the relevant exchange here in Nigeria. And PENCOM indeed also have rules that permit them to invest in these instruments as well. The problem is that these instruments are not available for pension companies to invest in at the moment. That's where the blockage is. It's not that the pension industry isn't wanting to invest in these. It is. It's that the investments are not available at the moment in the market.
Professor, does Nigeria not need to have a deeper capital market in order to be able to absorb, more securitized assets that you're trying to offer to foreign investors? When you look at the market capitalization of the NGX, I mean, it's, compared to like a South Africa where the Johannesburg Stock Exchange is, close to $1 trillion, is a little under that now. Don't we need a deeper, more liquid capital market to, to take in these ideas that you're putting forward?
We absolutely do, but small steps at a time. Talking about jumping to the capital markets is ideally what we're looking to do. We're looking at a deeper, more sophisticated capital market. But I'm even looking at smaller steps before we get to that. And what we're finding in other jurisdictions is that individual pension companies, individual insurance companies are looking to engage with the originators of these assets to create the sort of securities that they can invest in. Now, at the end of the day, these instruments that they're investing in need to be liquid. So we're needing to look at a capital market that is deep enough for them to be able to trade these instruments. And what I'm looking at in the fullness of time is not just a domestic capital market that is able to do that, but instruments that are capable of then being made available to investors elsewhere. So you can settle these securities on stock exchanges in Johannesburg, in Nairobi, eventually in places like London and New York as well. So broadening it out beyond Nigeria. But you're right. First steps are, let's make sure that we've got got these instruments available. I actually think that the demand is there. Once these instruments are available, and investors will come. And once we've got the domestic investors on side, we're then a question of looking at how we then tap the international investors. And for me, that's a question of making the liquidity of these investments cross-border. It's not just a question of coming to the domestic jurisdiction here in Nigeria to invest. They have to be capable of investing in these investments on the stock exchanges in these foreign countries.
Fantastic. It's really fascinating stuff what you're trying to do here, Professor. I really appreciate it. You mentioned insurance, and I'm glad you met with PENCOM and also with the SEC. NICOM is the regulator for insurance. Professor, I'm sure you know that the insurance penetration rate in Nigeria is under 1%. I mean, it's pretty low. So in terms of trying to get, solid assets that are backed in that sector, would they not want to see more participation there in order to be able to sell that sort of thing to an investor?
We absolutely do, but part of the story here is the cost and the availability of insurance, and the penetration, you're absolutely right, is very small. I'm looking at a market in which the insurance companies are able to match their risks and take, life insurance as an example. One of the issues we've got in Nigeria at the moment, even if those life insurance policies are underwritten, how are they offset? Where are the assets that are capable of then being used by the insurance companies to offset those liabilities? If those assets are not available, the cost of that insurance availability rises. So we're looking at putting in place the plumbing that will make the insurance policies more available. Now, does that fix a problem? Does it ensure that people are looking to obtain that level of insurance? That's not for me to fix. I'm looking to put in place, together with other stakeholders, a framework that will make that more competitive than it is at the moment.
Fantastic stuff. Professor Graham Penn, I wish we had more time to get into this, and I'm sure you'll make more frequent trips to Nigeria. We really do have to, expand this conversation. Thank you so much for taking the time to talk to us about this initiative of expanding, credit in Nigeria. Really appreciate your time.